Hello, everyone. Thank you for joining us for Abel Noser's web clinic, Discover How to Accurately Measure and Manage Fixed Income Trading Costs. I'm Dennis Dobson, CEO of Dobson Media Group. This is a live webcast from One Battery Park Plaza in downtown Manhattan. We have with us Peter Weiler, President of Abel Noser Solutions.
Thanks, Dennis. Great to be talking with you this afternoon.
Great. So for those of you watching or listening in, we want this web clinic to be interactive. If you have any questions during the presentation, please type them into the question box in your GoToWebinar control panel. I'll either bring them up during the presentation or we'll answer them in our Q&A portion at the end. If you don't get to your question, we'll answer them offline. Okay? So let's get started. So Peter, tell us about these black holes that are vacuuming away some of our portfolio returns.
Well, Dennis, what Abel Noser Solutions is doing is providing clarity. And using your black hole analogy, I assume you're referring to the fact that for so many years, bond trading has occurred in the dark with little public price discovery. At the same time, now through legislation such as MiFID II, SEC, and FINRA mandates, regulators are telling investors that fixed income trading is under greater scrutiny. I think traders, portfolio managers, and compliance officers will see fixed income TCA as a way to monitor trading while fulfilling their best execution obligations. And that's where Abel Noser Solutions comes in.
You mean in terms of accurately measuring and managing fixed income trading costs? Before we get to that, can you give us the background story on how Abel Noser developed fixed income TCA?
Yeah, sure, Dennis. So we have over 500 clients using our products in a multi-asset format, equities, Forex, and futures. But the story behind the development of our fixed income TCA product involves one of our clients. And they're a multi-asset investment management firm with over $25 billion under management. And the company's fixed income head trader is mainly focused on managing the firm's sell-side relationships, distributing trading according to research votes and execution performance. And by his best efforts, he was mainly steering trades to those dealers who most often came forward to offer competitive bids when he needed to trade. And last fall, this fixed income head trader's chief compliance officer let him know that the firm needed a fixed income measurement service like the one Abel Noser provides the firm for their equities operation. And of course, unlike his equity desk counterpart, the fixed income trader had never been involved with a formal TCA process, for that matter, and was frankly somewhat out of his comfort zone. Yet he was being asked to present best execution-like reports like the one produced by the company's equity desk.
Mm-hmm. They have $25 billion under management, and the equities group is using your TCA product. But now the fixed income trader is also being asked to measure his trading costs. How did it work out? I mean, after all, fixed income and equities can seem like very different animals.
No doubt. The fixed income head trader knew the TCA reports would show that his team was delivering best execution, but he felt that using an equity model would not reflect the reality of the differences between the two markets. And his counterpart on the equity desk explained that our TCA product would provide enough data to answer any questions from compliance, the portfolio management team, or even the board of directors. So he reached out to us.
Mm-hmm, mm-hmm. What were some of his requirements, or at least main concerns?
Well, first and foremost, I think they wanted to make sure that we had a strong grasp of the fixed income market structure, recognize the nuances and the limitations due to the lack of price discovery in some areas. So we think of it as a translucent marketplace. There's certainly pockets of transparency, but there's also many opaque areas. And also comprehensive trade cost benchmarking was very, very important. So fortunately, we had built up enough goodwill with the firm that the fixed income trader was willing to give us a chance. And we rolled up our sleeves and we dug into the problem together to look for solutions.
Hmm. So how did you get the data? Can you sort of get into the weeds a bit more about the process?
Yeah, sure. We began by looking at the market data available, and the TCA is the process of joining this public market data with private trading data. And with fixed income data, this data is dispersed among pricing services and trade reporting services and ATSs and ECNs. And each piece of the total puzzle, each as a piece of the total puzzle to contribute. And there's a natural feedback loop between the three main sources of information. You can see this illustrated up on your screen on slide 7. So you see, we look at evaluative pricing sources, bids and offers, and then priced and size sources. We aggregate this into the Abel Noser table of reference prices, and this table can be seen here on slide 8.
So now you have the pricing sources, like you say, derived from ATSs and ECNs and reporting services like Trace and MSRV. What do you do with the pricing data?
So Dennis, we created new metrics and gave them names based on the information that each of the pricing sources could produce. So for example, for sources that report trades that are priced and sized, Abel Noser calls these reference prices derived from these sources liquidity-based reference prices. The sources that provide bids and offers we call quote-based sources. And for the sources that give us indicative prices or interest rate spreads over benchmark securities, we call spread-based reference prices.
Okay, so you have each of the different categories of reference prices coming from the 3 different sources, as you explained, and which is shown here on slide 8 on the screen. So what do you do with these very different sources of reference prices?
That's a good question. We measure both the price the bond traded at and the interest rate the trader earned based on the price. And the ideal outcome here is for fixed income TCA tools to be able to move seamlessly between discussions about trade prices to talking about interest rates or spreads, depending on whether we're discussing governments, agencies, corporates, munis, mortgages, or even asset-backed securities. And we recognize that each of these markets has its own idiosyncrasies and that our reporting must reflect that. So factors such as macro news, benchmark interest rates, credit spreads, and other fixed income type specific features need to be calculated in too.
Right. So how did you organize these and make the idiosyncrasies of all the different fixed income products work together?
Yeah, well, working with the categories of reference prices or rates and our associative linking process, we used our 3 sets of reference prices to fill in the gaps where we see them. You can see the Abel Noser table of reference prices again on slide 10 on your screen. So if someone sends us a trade that's quoted as a rate, but we only have price information or spread information, we can translate those back into the rate that the client traded. The aggregated information is utilized to provide various outcome reports. In other words, fixed income TCA.
Very interesting. So Peter, what should our fixed income TCA be telling us, and how do you get the most out of performing TCA?
Look, as we all know, fixed income trades almost entirely over the counter in terms of instruments traded. Governments and new corporate issues can trade through ATSs and ECNs, but to trade off the run corporates or asset-backed securities requires dealer facilitation. So there is this gray area surrounding what one firm is paying for trades compared to its peers. And your fixed income TCA should be giving you an accurate reading on the overall market pricing of specific fixed income trades so that you know whether or not you are overpaying. And traders need to know what constitutes a fair price concession to get their trade done. They learn this by polling multiple counterparties, but they also from experience in measuring from the prices they see in similar instruments.
I see. So having access to as much trade cost data as possible will get you the most out of your TCA. So what was the reaction from the client's board?
Well, as I mentioned earlier, without a TCA process, the head trader couldn't report aggregate results to the board. He needed a way to collect all the information he saw every day and summarize it at periodic best execution committee meetings, as well as for the CIO and the board. So Abel Noser's universe of manager results enabled us to produce reports that show how the fixed income desk performed against other managers and desks who traded in similar instruments under similar conditions. And I believe the board was very satisfied.
Mm-hmm. So how many trades are you measuring against? Is it a sample from a larger group of trade prices, or are you comparing trade prices from an aggregate amount of trades, or?
Right, so we're working from a very large universe of data with the ability to benchmark against up to 650,000 plus fixed income securities. And with the fixed income head trader of the client firm that I was speaking about earlier, we were able to develop a custom transaction cost measurement analysis for that firm. And we collect the reference price and rate data from the source that I described, while our client firm provides us with the trade records to match the market data.
Mm-hmm. Is that where your post-trade Zoom tool comes in?
Exactly. So TradeZoom is set up for compliance officers, portfolio managers, and traders to review the aggregate results and focus in on trades that impact those aggregates. So then the compliance officers, portfolio managers, and traders can perform what Abel Noser calls the revolving TCA cycle, which I believe is illustrated on slide 12 on your screen. And I just want to add that TradeZoom offers the ability to drill into any result on the fly and create a graphical display which reveals all the information one could want to know about a trade. And we also offer completely custom reports to meet the needs of any buy-side or sell-side trading desk. So can I show you a quick demo?
Yeah, absolutely. Let's see what you have.
Okay, so this is TradeZoom, our flagship post-trade product, which is the portal for all of our multi-asset TCA offerings. And you can see that the trades in different sectors of the market here can be measured versus the three different kinds of reference prices I mentioned: liquidity-based, quote-based, and spread-based. Further, we can translate the results into prices, rates, and spreads, and these can be shown, of course, in dollars or basis points. And we also recognize that there's no single fixed income market. So each sector of the bond universe has its own methods and means of communicating prices and agreements to trade. So we must be able to speak to those constituencies, and the product had better speak to them in a language that they recognize as their own. So for traders who trade on price, we got to show prices. For traders who trade on rate or on spread, it's essential for us to show the trades in that frame of reference.
Mm-hmm. I see. With all this aggregated data you have available, what do we do next?
Right. So now TradeZoom compares the firm's trading cost, and then execution reports can be created to fit the needs of whomever the user is. So, for example, the head of fixed income trading can collaborate with the compliance officer to ensure that the firm is meeting its best execution obligations. The head of fixed income trading can also use the data to discuss with portfolio managers the possible causes and solutions to slippage. And as we get to more data from our clients, we'll be able to produce more detailed universe benchmarks to indicate whether the trader's costs are in line with the rest of his peers. And this information can also help the portfolio manager and his client services team when issues of best execution comes up with clients. And the neat news here is that since we have so many clients, and many of those clients have a fixed income component, that benchmarking is happening rapidly here at Abel Noser Solutions. And so as you can see, I mean, clearly TradeZoom has a lot of depth and plenty of features. And Another exciting feature that we're working on is an empirical model of the fixed income trading using the data that we're collecting. So when all is said and done, the trader, by using TradeZoom and our custom reporting feature, can satisfy many constituencies both inside and outside his firm. And this has been the TCA model for many years in the other asset spaces, equities, FX, Forex, and now it's quickly gaining wide acceptance in the fixed income market as well.
I think we've learned a few things about fixed income TCA from our brief chat, Peter. Thanks.
Well, thank you, Dennis, for the opportunity. And just to recap, we believe we've developed useful methods for deriving reference prices from the various services that publish fixed income pricing and rate information. And we put these pieces of information together for you to create a holistic view of pricing in the fixed income market. So at this time, I'd be happy to take any questions that anyone has that is on the webinar right now.
Thank you, Peter. And just a reminder, please be sure to type your questions into the question box in your GoToWebinar control panel on your screen. And okay, looks like we have a question from initials JT. JT asks, what regions do you operate in?
Sure. Well, this is a global product, like all of our other products, covering most bond types that are out there. As I mentioned earlier, we're talking about 650,000 plus securities. And if we don't measure a particular security or bond, we'll add that to our security master. So we recognize that most of our clients are trading around the globe, and the product and the coverage needs to match that trading activity.
Mm-hmm. Okay, we have a question in from initials PH. So PH asks, do you provide free trials?
Well, absolutely. I mean, we've been doing this for many years, and it's not only free, but there is no obligation, and it's typically the way for us to, and for the client, the prospect, to understand the value of the solution. So it's certainly a lot more fun to see some historical data that's a prospect's data rather than demo data. So we'd be happy to run any sort of representative time period for folks that are interested.
Okay, we have a question from JB. JB asks, how long would it take to set this up at our company?
Sure. Well, it's really a matter of weeks. The onboarding takes place by first having that trade extract sent over to us from an order management system or an EMS execution management system. And the trade extracts are sent to us and scrubbed and sent back. And at the same time, what we're doing is we're sitting down as part of the onboarding process, and we're doing the training that's necessary for the staff that will be using the product. So it really is a matter of weeks. It's certainly not months that somebody can get started with us.
Okay. And RP asks, what are the pricing options?
Sure. So the pricing, it's a software for service model, unlimited licenses, firm-wide licenses, and pricing is based upon a number of factors, including the frequency of reporting and the principal amount of trades measured. And typically included in this in the product is a consultative service to interpret the reports, provide actionable recommendations, and then behind that also is a client support team. So we feel this is the strongest model. It's a combination of software meets gray matter in terms of providing consultative services as well. So can we take perhaps
Okay, we have another question again from JB. Yeah, so he asks, how far back does your benchmark data go?
Sure. So we've been collecting data for quite some time now. So historically, we can go back from 2016 on. And we have the ability to run that analysis and that information. So although I would recommend that I think the best thing to do in this situation is, in terms of thinking about a free trial, is to send some recent data. I think the more recent data has certainly more utility for people out there.
Okay, it looks like we've covered all of our questions. Peter, is there anything else you'd wanted to say, or before we wrap up?
Yeah, well, I'd like to just thank everybody, and we appreciate that you joined us. And we'll be providing a link to the recording of the web clinic so you can review the material. We'll also provide a link to the recording on abelnoser.com, and if you want to send a link out to a colleague, that would be great. And lastly, we'd be happy to conduct a free, no obligation trial. And to see how you can get started with that, please visit our website or just drop us an email at info@abelnoser.com. And see you all next time, and thank you so much for participating, and have a great day.